Let's talk about equity capital markets or stock markets. Stock markets are venues where buyers and sellers meet to exchange equity shares of public corporations. Stock markets are vital components of a free market economy because they enable democratized access to trading and exchange of capital for investors of all kinds. They perform several functions in markets, including efficient price discovery and efficient dealing. In the US, the main regulators include the Securities and Exchange Commission, or SEC, and market participants under the purview of the Financial Industry Regulatory Authority, or FINRA. Let's discuss stock markets' functions. First of all, it's security and validity of transactions. While more participants are important for the efficient working of a market, the same market needs to ensure that all participants are verified and remain compliant with the necessary rules and regulations, leaving no room for default by any of the parties. Additionally, it should ensure that all associated entities operating in the market adhere to the rules and work within the legal framework given by the regulator. The next function would be efficient price discovery. Stock markets need to support an efficient mechanism for price discovery, which refers to the act of deciding the proper price of a security and is usually performed by assessing market supply and demand and other factors associated with the transactions. And another function would be liquidity maintenance. While getting the number of buyers and sellers for a particular financial security are out of control for the stock market, it needs to ensure that whoever is qualified and willing to trade gets instant access to place orders that should get executed at a fair price. The stock market is one of the most vital components of a free market economy. It allows companies to raise money by offering stock shares and corporate bonds. It lets common investors participate in the financial achievements of the companies, make profits through capital gains, and earn money through dividends. While individual stock exchanges compete against each other to get maximum transaction volume, stock markets as a whole may be facing competitive threats. Because of the rising popularity of blockchains, many crypto exchanges have emerged. Though their popularity remains limited, they pose a threat to the traditional stock market model by automating a bulk of the work done by various stock market participants and by offering zero to low cost services.